Good day, and welcome to your daily global economy update. Here are the top economic and market stories making headlines around the world. The United States has imposed a steep 25% tariff on Indian exports, following India's continued purchases of Russian oil. This new order, signed by President Donald Trump, raises total U.S. tariffs on some Indian goods to as high as 50% and is expected to take effect 21 days after August 7. The country exported over $78 billion worth of goods to the U.S. in 2024, making America its largest export market. Key sectors like textiles, pharmaceuticals, and auto parts now face increased costs and reduced competitiveness. In return, American businesses may also feel the heat through higher import prices and disrupted supply chains, especially in the pharmaceutical sector, where India is a major supplier of generic drugs. Economists warn this could strain U.S.-India relations and disrupt global trade routes, especially in South Asia. Moving over to China, the world's second-largest economy, is also showing signs of strain. China's export growth slowed to 5.4% in July, down from 9.8% in June, as businesses rush to ship goods before a possible wave of new U.S. tariffs kicks in by August 12th. This slowdown signals weakening demand globally, but also reveals how trade tensions are starting to bite. If exports continue to fall, China may face manufacturing cuts, supply chain shifts, and ripple effects across emerging markets tied to Chinese demand. The yuan slid 0.3% on the news, and the Shanghai Composite Index dipped slightly by 0.4%. Now to the UK, where economic momentum is fading fast. The UK's construction sector just reported its worst numbers in 5 years. The construction PMI dropped to 44.3, far below the 50 mark that separates growth from contraction. What's behind this? A mix of high interest rates, sluggish consumer demand, and rising material costs. The result? Delayed housing projects, reduced hiring in construction, and growing fears of a broader economic slowdown. In response, the Bank of England is expected to cut interest rates to 4.75% from the current 5.0% at its next meeting. If the contraction continues, thousands of construction jobs could be at risk, and housing delivery targets may be missed across the UK. Now let's take a quick look at other major headlines from today. U.S. stock markets rose, with the Nasdaq climbing 1.2% and the S&P 500 up 0.9%, driven by strong earnings from Apple and McDonald's. Apple also pledged $100 billion for U.S. manufacturing expansion. The U.S. dollar index fell 0.2% as investors priced in a 70% probability of a Federal Reserve rate cut in September. Fed officials warned of a weakening U.S. job market, with non-farm payrolls growth slowing to 120,000 in July, down from 206,000 in June. The Reserve Bank of India held interest rates at 5.50%, citing concerns over U.S. tariffs, potentially shaving 0.4 percentage points off India's growth forecast. That's all for today's Global Economic Roundup. For your daily dose of global economic and finance news, please subscribe, like, share, and comment. See you tomorrow.